Hi, this is Ryan Ellefson with Platinum Payment Systems. It's good to be here today. I've been in the processing industry for over 10 years now, and Platinum Payments has processed over $500 million in credit card transactions each year. We're a quickly growing business, and we specialize in helping merchants exactly in the kinds of businesses that you guys are in. We're in the direct response field. We do retail, of course, as well, mail order, telephone order, online, e-biz, any of that kind of stuff. We actually specialize in the higher risk stuff as opposed to the retail. We help all kinds of businesses. We set up businesses that are just getting started, hundreds of those a month, in fact, and all the way to your multi-million dollar companies. We specialize in those and do a good job in any kind of company in between. I want to talk to you today just about processing, go over a bunch of things with you and really help you guys understand the processing world, what kinds of things you should look for, what you should see in a processor. As somebody approaches you and tries to get your credit card processing business, they come at you with a lot of flashy terms and a lot of promises, and how do you know they're going to deliver? So I want to talk to you about what to look for in a processor. I want to talk to you a little about how merchant processing works to give you a little bit of leverage so that a lot of these companies can't use your ignorance on the topic against you. How much should processing cost you? We're going to go over the cost structures and what those different structures are and why one might be more advantageous to you than another. And then help you know how not to be taken advantage of with all kinds of hidden fees, and there are a lot of those hidden fees. And lastly, we want to talk to you about how to reduce your costs, how to mitigate risk, and really just how to get through this difficult credit card landscape. You guys know it's changing every day. In fact, I can tell you right now, there are difficulties in this business right now. You've got the FTC, the Better Business Bureaus, the Attorney Generals. You know, everybody's interested in this online business world, and so it's under a lot of scrutiny. And getting set up with the right processor is extremely important. So let's talk about why I'm doing this with you today. I'm with Platinum Payment Systems, like I said, and so how can Platinum help you profit? Well, we can help you by finding the best processor for your needs. And of course, we think that's us, right? And we're going to do our best to give you an objective look at your processing and help you. But we really think that we can do that for you. We're going to help you get the best terms, such as high approval limits and low reserves. One of the great things about us, going back to point number one, is really that we don't try and pigeonhole you into a specific processor. So we act as a broker, and we work with 12 different banks. So rather than me coming to you, for example, with a First Data relationship and saying, okay, I'm an ISO for First Data, and I want to set you up with an account. Well, the only thing I can offer you is First Data. And we know that First Data specializes in retail accounts. So if I'm an agent for First Data and I come to you and say, hey, you should sign up with me, well, that's not going to do you guys a lot of good in your businesses, because first of all, you don't need First Data because you don't need a retail account. Second of all, they don't understand your account, so you're going to run into troubles with them. And so what you really need is a company like us that can help put you in the right place. With our 12 different relationships, we can take a look at the things that you're in need of and put you in the right place with the right processor for your needs. We can help negotiate those rates for you because of our buy rates, because of our relationships with these guys and the amount of business that we bring them. We can really use some leverage in getting those rates down. We're going to answer all of your questions. Throughout this webinar, I hope to answer a lot of the questions that you've had, and then at the end I'll give you a phone number where you can reach me and where we can discuss any other questions that you might have. I'll also be providing a little questionnaire for you. If you can submit a few fields of information to me, I just call you at your convenience and walk through any questions that you might have and see if there's anything we can do for you. And we do all this, of course, at no cost to you. It's a free consultation. It doesn't cost you a thing. We want to educate you, and I think once we've educated you, you can certainly take that information elsewhere, but I think you'll see that what we can bring is pretty impressive. So, what do you look for in a processor? And I've been using this analogy for many years. I think when you approach a merchant processor, it's like a three-legged stool. And as you know, a stool can't stand on two legs. It's got to have all three legs. The first and most important leg of that stool is relationships. Relationships mean everything, especially in the e-commerce or the direct response business. If you're running a business, the last thing you want to happen is to come in and find out your account's been frozen, or that they've decided to shut down your account, or they're discontinuing your type of business. And they will do that without so much as a phone call. And unfortunately, some of you listening to this webinar today have been through this. You know it's happened, and it's very, very frustrating. The second thing's technology. You want to be able to know that you've got the best in tools, whether that's gateway tools or with your processor, that you've got the right filters if you want to use those or enable those, if you want the right kind of bin blocking, or maybe you want to use multiple processors, so you're interested in doing some dynamic transaction routing that will send percentages of transactions to various processors so you mitigate your risk. There are a number of different technologies, and those are very important. And then the third one is rates. And guys, I know that a lot of you listening are just interested in rates. And don't get me wrong, I'm not going to try and sell you anything today. I'm not going to try and sell you on higher rates. Lower rates are absolutely important, and getting the best deal is extremely important. But I will tell you this, and I promise you it's true, I would take a higher rate and a better relationship any day of the week over a bad relationship and great rates. Because you can get those great rates for a few weeks, maybe a few months, and then come in and have your business shut down and be in a world of hurt and wish that you'd paid a few extra bucks for a better relationship. Of course, the best tool is all three. The best relationship is one that provides the good relationship, the good service, the good response time, the heads up with any problems, as well as the technology and as well as the rates. And if you can get a relationship that's got all three of those, that's gold. That's what you're looking for, and that's what we want to help set up for you. So let's talk about how merchant processing works. First of all, a merchant account is not a bank account, okay? So a merchant account doesn't hold any funds. They simply pass your money straight through to the bank from one bank to another. This transfer process usually takes a couple of days, 2 to 3 days for Visa and MasterCard, and can take up to 5 or 6 for American Express. Now I've got right here there's a cool picture of how this works, and I know this is a little bit confusing, so let's go through this together really quickly. There are two major banks involved here. One is the card issuer, or the issuing bank, and one is the card acquirer, or the acquiring bank. In every credit card transaction, both banks have their part of the transaction, and both banks get paid. If you look down in the bottom left corner, there's a consumer. That's your customer. It's purchasing from you. And if you look on the bottom right-hand corner, that's you, the merchant, receiving the money. So what happens is, if you make a $100 sale, a customer comes to your site and purchases something for $100. That $100 is then sent to the issuing bank. And the issuing bank is the bank that issued the customer his or her credit card. So if you belong to the local credit union, your local credit union issued you a credit card as a consumer. That is the issuing bank. If you've got a Citibank card, Citibank is your issuing bank. Okay? So they will issue you a card. When that $100 transaction is swiped, the issuing bank gets to approve or decline that charge. So they get to go and say, it looks like consumer X is trying to purchase sporting goods equipment. That's not very risky, so let's go ahead and we'll approve that. So they send that over to the acquiring bank. The acquiring bank is the bank that has set up your merchant account. Okay, so every single one of you that has a merchant account or will have a merchant account has a bank behind that merchant account. That is the acquiring bank. The acquiring bank says, yes, we'll accept this transaction on behalf of the merchant, and they pass that money on to you, the merchant. Now, if you'll notice, they pass it on, but they do withhold some fees. And we are going to look at this on a later slide, but as you can see, $100 ends up at about $97.50, and of course these are just some rough estimates, but that's how a credit card transaction works. It actually goes through several stages, and that's why it takes a few days. So let's talk about gateway. You've got to have a gateway. If you're going to do business on the internet, you have to have a gateway. A gateway is simply another pass-through between the business and the bank. The reason for this is that every bank has their own platform that they work on. In other words, they all receive their information in different ways, and they like to use their own fields and have everything set up uniquely. Well, gateways have gone out and they have integrated to each one of these platforms so that you, the merchant, don't have to worry about going and changing all of your business structure to match the bank's API information every time you set up a new account. All you have to do is get a merchant account and select a gateway, and that gateway will automatically pass your information to the bank in the right platform. There are charges for a gateway, and these charges range anywhere from 5 cents to 75 cents. And it's important to understand that your 5-cent options probably aren't going to provide you with the type of service that you're interested in. Whereas your 75 cent solutions are going to provide you with all the bells and whistles. And perhaps you want those, maybe you don't. And if you don't need them, you don't want to pay 75 cents a transaction for them, that's for sure. There are a lot of processors that'll set up a gateway for you, that'll set up third-party gateways for you. We at Platinum, of course, can set up third-party gateways for you as well. We get special buy rates, so we can take care of you there. A lot of third-party gateways, are set up through the processors, and they'll offer you better rates. Now, let me tell you the goods and bads about this, because again, a lot of you may have been approached by this or have this relationship, where you'll go to, let's say you go to a processor, let's say it's a First Data, and First Data says we also have a proprietary gateway, and you should use our gateway, and we'll set it up for either little money or no money. We'll even give it to you for free. And they can afford to do that for a couple reasons. One is that they're going to make up for those fees somewhere else by hiding some fees in your discount rate. Or two, they use that to lock you in. Because one of the bad things about a proprietary gateway is that you're locked in. Because now you've gone ahead and you have integrated your API. In other words, you've integrated your system to their proprietary gateway. Now if you decide you're not happy with First Data, now someday you watch an awesome webinar from Ryan Ellefson and hear that, hey, I might want to change processors because First Data doesn't do my type of business. They're actually a retail organization. Well, guess what? Now it's very difficult for you to change because you've got to reintegrate because now you're locked into their proprietary gateway. So that's one reason you really want to be careful with those, even though they do have some great pricing. One of the most popular gateways that is inexpensive and still works well for a wide variety of programs, of businesses, is Authorize.net. Authorize.net doesn't have all of the bells and whistles of a lot of the expensive gateways, but it's a great choice if you don't need a lot of those. And I would say that 90 to 95% of you listening to this today do not need any of the big expensive gateways. Authorize.net will work fine for you. And it operates right around there in the 10 to 15 cents a transaction category, and it can really do quite a few things and probably will serve all of your needs. There are special needs gateways. The NMI platform is the back end for a lot of these, and they have built a lot of specialized gateways that, as I mentioned before, will do everything from routing all of your transactions to multiple processors, to blocking certain customers or blocking customers through a specific issuing bank if you feel like they're causing a lot of risk for your company. There's all kinds of things you can do with some of these special needs gateways, and it's important that you guys know that Platinum has preferred rates with all of these, but we're not locking you into any of them. Again, just like we can move you from account to account and put you where you need to go and always take care of you, we can also set you up with the right gateway for you and make sure that it's priced as as good as possible, and we can always help you if you ever decide to move. There's no reason to be locked into any sort of relationship like that. So let's talk about cost. What should merchant processing cost you? I know a lot of you are wondering, wow, my pricing right now, what is it looking like? How does it rate compared to other people in this business? I'll do a quick plug here. We've just written a new book detailing this topic, and I know merchant processing is not an exciting read for you guys, and probably sitting through this webinar might be tough for some of you, but I promise you the new book does have a lot of information on this, and it's written in layman's terms. It's written to help you guys, if you're interested, know how to navigate this world in even more detail than I'm going to give you on this webinar. And when we get to the webinar, I'm going to make you a special offer to get this to you free as part of a consultation. So everyone who processes has to pay interchange. In order to understand pricing, you need to understand the cost of pricing, and that's called interchange. Interchange is the very basic cost plus a small markup that goes to the issuing and acquiring banks. Interchange is non-negotiable. We can't negotiate interchange because it's set by the card association. Interchange is reviewed twice a year, and new interchange rates are introduced all the time. Sometimes the banks will actually increase those rates, but your processor will cover those charges. So for example, a rate may go up, but they'll just say, we'd rather keep our customers this year. We're in customer retention mode, and so we do not want to raise those rates. And of course, they'll let you know that they're doing that on your behalf so that you love them. Other times, they'll pass those rates on to you, those rate increases on to you, and you'll see your rates go up a little bit. When that happens, it's great to have somebody like us there to help negotiate that down for you at no cost to you. So interchange is a fee that acquiring banks pay to issuing banks, and everybody all these banks get to split up this rate. And like I said, unfortunately, there's nothing we can do about it. The only part that we can deal with is the markup, because the markup can be significant or it can be small, and we want to help you with that. So the markup's the profit for the acquiring bank. So let's look through this example again. You've got your issuing bank and your acquiring bank here. You'll notice when the $100 sale is run, the issuing bank ends up with $2 of that sale. Now that actually comes back to the issuing bank through the acquiring bank, like I said earlier, but for the sake of discussion here and for this diagram, it's important that you know that the issuing bank gets to keep about $2 of that, and the acquiring bank gets to keep about 50 cents of it. So by the time it gets to you, you run your transaction. At the end of the month, they're going to take out their fees if you're on a monthly rate, or every day they'll take out your fees if you're on a daily rate. But bottom line is you end up with about $97.50, or roughly 2.5% taken out of your transactions that goes to the bank. And so that's how interchange works. What you want to do as a merchant, of course, is to make as big a piece of the pie as possible. If you can retain $98 or $98.50 of that 100, that's what you want to do. The last thing you want to do is give up $96. So that's what we're going to help you do, and hopefully understanding cost is going to help you, be able to navigate that better. The average interchange rate in the United States is 1.79%, but retail's generally lower and e-commerce is higher. In fact, higher risk accounts, including e-commerce and probably what most of you guys are doing that are listening to this, are over 2%. And so those rates are over, since they're set at over 2%, of course banks want to make a little more on that. If you look at this, this is a chart that shows the most common interchange rates in the United States today. And so if you look at the top, they're broken down by brand. You'll see that Visa and MasterCard are represented on this diagram. If you'll look across there at the very top, you'll see that the lowest Visa rate comes in at about there's 1.6%, and then down a little ways, 1.43% even. Now, you guessed it, the 1.43 isn't used very often, right? More often, they'll end up charging you the 1.6%. And if you'll also notice, that goes up as high as 2.7%. So interchange rates can bounce quite a ways. They fluctuate by over a full percentage point. And so what you're paying for interchange will change depending on some certain factors. Now look at MasterCard, the same thing. MasterCard rates are as low as 1.64 there and go as high as 2.65 in this example. So let's talk quickly, and then we'll address it in a minute, but what is it that makes these at different interchange rates? Well, there are different rates for all the different kinds of businesses. The way those cards are collected has a lot to do with it, whether it's a rewards card or not, and what kind of reward card it is has a lot to do with it. What type of information you are collecting at the sale. Are you collecting your AVS information? Are you getting the CVV code? Those both affect your rates as well. So there are a lot of things that affect interchange rates. You should all know that none of your business is coming in at one rate. If you're running an internet business on any given day, you're probably getting 10 to 20 different interchange rates. And so knowing how to use those rates to your advantage and how your accounts are priced based on those rates is important. So there are essentially two models for charging clients. There is a discount rate and a cost plus rate. Every one of you listening to this is currently, if you've got a merchant account, you're set up on one of these two rates. It's a discount rate or a cost plus rate. So I want to explain these to you and help you understand what they are so that you'll know which kind of rate you want, because this is negotiable. It absolutely is negotiable. And you, the merchant, should demand the type of pricing that you want to have. So we're going to look at a discount rate model first. Essentially, banks will go out there and they'll take an average of the interchange rates that your type of business would incur. So if you're an e-commerce business, they'll go out and they'll look at all the interchange rates for an e-commerce business, and they've got some special formulas to determine what they think your risk level will be and what your interchange is going to come in at. And then what they'll do is they'll set a price that's comfortably above the average interchange rate that you might get. In other words, if they think that your interchange rate might average about 2.1% and 15 cents a transaction, what they will do is price you at 2.59% and 25 cents a transaction. Now that's just an example. It could be cheaper than that. It could be more expensive than that. But as you can see, if I think your average is 2.1%, pricing you at 2.59 gives me a good buffer and will let the banks know that they're going to be profitable on you. The difference between your rate and interchange is their profit. Remember, that 2.1% goes to the banks as set by Visa, MasterCard. The difference in the 2.1 and the 2.59 is pure profit. So the advantage to this pricing is that the merchant doesn't have to pay hundreds of different rates. And that's great for you guys, right? The merchant just gets a discount rate, and so the merchant can just say, well, this is my price. It's 2.59%, for example. And you always know that's your price, and it's simplified. Your statement won't have pages and pages of individualized rates that are confusing. And so that's great. The higher the risk, the more profit the bank will build into the price, which is where we can help. So obviously, if it's a higher risk account and it's going to average over 2%, the bank might say, I want to come in at 2.59% because that gives me 49 points of buffer That gives me a little bit of room to understand that's about a 0.5%. That helps me to be able to make sure that I'm still making money on you, even if you come in at 2.3 or a 2.35%. So that's where the banks price you a little bit higher. And the more risk that they have, the more fluctuation is built into interchange, and the higher the banks are going to want to price you. And that's really what we do, is we go in and help make sure that that pricing is low. We set your pricing. Now, we do it with the bank, but we'll always set it really low, and if they come back, then we'll negotiate from there. But we want to get you the best pricing possible. Let's talk about a cost plus model. Now, I want to let you know, I want to stop here and say there are problems as well with that, with both models, and we'll talk about it a little more in a minute, but right now I just want to point out what both models are. A cost plus pricing model is just like it sounds. It takes each individual interchange rate and adds a little markup. Okay, the plus, right? So they take the cost of interchange and add a little markup, which is cost plus. So let's assume your price is cost plus 30 basis points. A basis point is 1/100th of a percent. So 30 basis points is about 1/3 of a percent. So what they're saying is any interchange rate that comes in on your charges, they're going to add 30 basis points or 1/3 of a percent to that. So if interchange were 2.10 and 15 cents, just like it was in our last example, you would be charged 2.1% plus the 0.30 or the 1/3 of a percent or 30 basis points markup and the 15 cents, which would equal 2.40% and 17 cents a transaction. So that's what you'd be billed. As you can see, that can be manipulated either way. That can be, but it's a very simple pricing. Okay, so you always know that whatever the interchange rate is, you're going to come up at 30 basis points above it in this example. Cost plus rates can also come in at cost plus 20 basis points or 25 or 35. I'm using 30 just as an example. If interchange were 2.25% and 10 cents, at this same example of 30 basis points, you would pay 2.55% and the 10 cents. Okay, so everyone understand that? Whatever your markup is, or the plus, if it's plus 30 basis points, you're just going to add 30 basis points to interchange, and that's going to be your cost. Often banks will add transaction fees to this as well. So they can say that they could charge you 30 basis points plus 10 cents, for example. So if you look above on our example, if you were at 2.10 interchange plus 15 cents, so if that's interchange and your rate was 30 basis points plus 10 cents, do the math, you're now paying 2.4% plus 25 cents a transaction. Okay, let's talk about the positives and the negatives of these. Generally speaking, most merchants prefer cost plus pricing. Okay, now the reality, I want you guys to understand, the reality is that either method can be manipulated by the banks to arrive at the same charge or the same profit margin for the bank. So the method is less important than your agent or bank. Okay, that's why it makes sense to go again with somebody like us that can help you with this. Okay, I could, if I wanted to, I could set up cost plus pricing that was more expensive than discount rate, or vice versa. But generally speaking, people like the cost plus rate better because it's transparent. You see exactly what you're being billed. Your statements are longer, and your statements have a whole list of interchange rates that you accrued and exactly how much money was billed at each interchange, and it shows you the markup, and you can total all of your charges. Now, just because they're being transparent doesn't mean they're not ripping you off transparently. Okay? So remember, that can still be a problem. So let's say a customer spends $100 on your product and the discount rate is 2.10% and 15 cents a transaction. Under the discount rate model, I could simply set your discount rate at 2.4% and 21 cents a transaction. That's great because my profit is now 30 basis points and 6 cents per transaction. However, I could also set you up at a cost plus model where your price is cost plus 30 basis points and 6 cents a transaction, which would come out to the same thing, 2.4% and 21 cents a transaction. So I just set this up to show you that just because one rate is transparent doesn't mean it's better. One of these isn't inherently better than the other one. It is just sometimes a little nicer to have transparency. Okay, but really what you need to make sure is that you've got an agent or a bank that is working for you. And the only way they're going to do that, folks, is if you are armed with some knowledge and some leverage, because they're in the business of making money. Okay, now it's not as simple as this example, because obviously there's hundreds of interchange rates, but as you can see, one method is not inherently higher or lower than the other. Often higher risk merchants, such as online and telesales merchants, aren't even given the option of cost plus pricing. And so it's important that you know you have that option, and you can certainly ask for it. Most banks would be willing to give you that option as well. Let's talk hidden fees. There are ways to hide the fees in both of the models. Okay? So let's look at the discount rate model. Now I'll tell you, it's a little bit easier to hide fees in the discount rate model, which is another reason why people prefer cost plus. With the discount rate, you have to understand that the rate you've been quoted is not necessarily the rate that you're being billed. So here's what happens. You guys have been here before. You figure out that you have a 2.25 discount rate, and a credit card salesman comes to your door, a merchant processor representative comes to your door or your business and says, hey, I'd like to help you get better rates. And so they say, I just need to see some of your statements, and I will help you know what you're paying, and I will help you pay less, which incidentally is exactly what I'm going to do for you at the end of this webinar. But I'm going to be honest with you because you now know exactly what I'm going to do. So they're going to come back to you and they're going to say, it looks like you're paying 2.25%. I can beat that. I'm going to quote you 2.15%. I'm going to save you 10 basis points on every penny that comes through there. Now you think that sounds wonderful. So yeah, this is clearly cheaper. I'm going to go with 2.15 because it's less than 2.25. What they're not telling you is that that is your qualified rate, meaning that is the best rate that you can possibly get. What they failed to share with you is that anytime anybody uses a business card or a rewards card, or they have to key in an entry, or you don't take AVS, or you don't take CVV, or 100 other things, 100 other variables that can affect this, you don't pay a qualified rate. You pay a downgraded rate, which is called a mid-qualified rate or a non-qualified rate. Which means every one of you out there that right now is thinking, oh, I know my discount rate, it's 2.59%. Well, guess what? Your mid-qualified rate might be somewhere around 3.5%, and your non-qualified rate is about 4.5%. And you are paying up to 50% of your cards or more on that non-qual or mid-qual rate, which is where you come up with an effective discount rate of somewhere around 3.5%. Effective discount rate means all in with all of your fees. So a lot of processors will trick you this way. They'll trick you by offering you extremely low qualified rates up front, right? So if you're paying 2.59%, I can come in and dazzle you with a 2.1% qualified rate, which is 49 basis points lower. That's 0.5%. That sounds like a smoking deal, doesn't it? But what you don't realize is I've looked at your statement and I know that you're paying a mid-qualified rate of 3.2, and I'm going to raise your mid-qualified rate to 3.8, and I'm going to put your non-qualified rate higher than your current non-qualified rate as well, which means I'm actually going to make as much or more money on you now than you were from your current processor. Pretty sneaky, isn't it? That is how you can manipulate a discount rate to actually be more expensive even though it looks better. Okay? Like I said, the rewards cards, the gift cards, and the business cards all downgrade. You guys didn't really think that the banks were paying for those rewards, right? You guys are. The merchant pays for that through higher discount rates. That's how they afford to send people on vacations using their miles. That's how Hertz gets their Hertz Gold extra points, right? That's how you get those things. So you guys pay for those. Also, like I said, the lack of CVV or AVS causes downgrades. There's lots of things that cause downgrades, and we can certainly talk when we set up a free consultation with you. I'm happy to go over with you your statements and tell you what you're paying for, what kinds of things you're being billed, and show you exactly where we might be able to save you some money. Let's look at the cost plus model. Some of you might be on a cost plus model. It is harder to hide fees on a cost plus model. Interestingly enough, the best way to deceive people with this model is to simply feed the notion that this model is always cheaper. I know a lot of you have heard this, and so what I can do is come in and tell you, as a credit card processor, I could come to you and say, you know what, cost plus is always cheaper. In fact, it looks like right now you've got a 2.10 discount rate, but you're paying a discount rate and there's hidden fees there. So what I'm going to do is come in and I'm going to give you a cost plus 50 basis points. That way you're always paying just cost plus that 0.5%. Well, that might sound like a wonderful deal to a merchant that's uneducated. But if you know that 50 basis points is quite a bit over interchange, and interchange can be as high as 2.65%, they just set you up to pay over 3% now. You see what they've done? So the cost plus model pricing can actually be as high or higher than discount rate. So it's important to understand how this works. It's important to understand that cost plus pricing isn't necessarily cheaper, it's just more transparent. And once you've sat through this webinar today and you understand how they work, I would still counsel you to go with cost plus pricing when you can, but now you know what to look for and you know where your cost plus pricing should be. And the only reason you'd ever have to pay more is if you were such a high risk client because your chargebacks were so high or your financials were bad. If you were that type of client and you needed a bank to take a little more of a risk with your processing, then they may require some higher rates, and that might just be unavoidable. There are always extra fees that apply to both types of billing, such as application fees, termination fees, batch fees, authorization fees. There's lots of little downgrades and fees. We want to help you understand what those are and not pay them. There's no reason to pay application fees and termination fees. Okay, batch fees are pretty common. Authorization fees, those have negotiable pricing, so we can talk about those. Let's talk about how to reduce your risk. If you want to reduce your risk, capture AVS information. Get the address verification. Get CVV codes off the back of the card. Now guys, like I've told you, I work in this direct response world. Some of you are rolling your eyes right now and thinking, oh, he doesn't know what he's talking about. So let me prove to you I do. If you're online and you're running an online business, I personally would not capture AVS information because AVS information is wrong so much of the time because people move or banks keyed in an address incorrectly or all kinds of things. AVS, that address verification information, is wrong so often you will actually lose lots of legitimate sales if you screen AVS information. The flip side of that is, just you need to know that the flip side is you will pay more per transaction if you don't collect AVS. But I've done the math, and what you're going to lose in rates is still far less than what you would lose for the sale price. So do you understand that? What I'm saying is you might lose a couple of basis points by getting downgraded for not collecting AVS, but that still doesn't make up for losing a $100 charge because you did use AVS. So I'd counsel you not to collect AVS, even though it's going to cost you a little more. Now, having said that, that's not the safest option. Okay, you should always collect the CVV code off the back of the card. Always. That opens you up to fraud. That opens you up to increased scrutiny by the bank, and it does downgrade your charges. I would counsel you to get the CVV code off the back of the card, or the front of the card in some cases, if it's an Amex. Now I know that for some of you this isn't the most feasible thing, and I can tell you that the downgrade is not huge on that, and so it still might be worth not collecting, but I would counsel you to do so. Capture charges immediately. If you wait a few days, it costs you more money. Now again, there are reasons for holding charges. Some of you might have a 3-day right to rescind, and so if you run the charge immediately, then you end up refunding, and that makes your refund rates go through the roof, and you don't want that. So sometimes people will hold charges for 2 or 3 days, and that way if somebody calls and says, you know what, I changed my mind, and you can't talk them into keeping your product, then all you have to do is just let that authorization fall off their card. You don't have to go capture that charge, and it doesn't hurt your refund percentage. But again, you're playing with a little bit of fire there, because it is going to cost you more money every day you hold that charge. Okay, fight chargebacks, guys. There are people out there that will tell you just let the chargebacks go. Just accept them all. Don't respond. If you don't respond at all, they'll just go ahead and accept them. Guys, that's bad advice. That's bad advice. You should fight every chargeback. Whether you win or lose, fight the chargebacks. It will help you. Okay, it'll help your pricing, it'll help your relationship with the bank, and you will win some of them. And I am absolutely willing to help you know how to fight chargebacks. I can tell you what to say when you fight chargebacks, and conveniently we have a service that will help fight those chargebacks for you and actually guarantee that you'll win all your chargebacks. Before I tell you about that, let's talk about PCI compliance. PCI compliance is a payment card industry compliance program. It is mandated. Okay? In a nutshell, this is a security standard set by the Card Association to ensure that merchants have proper electronic and physical security in place. It's not optional. There are fees coming down now. This PCI compliance has actually been in effect for several years, but banks are now starting the fining process. They actually gave it a few years for people to understand this process and become compliant. If your processor right now is not requiring you to be compliant and they have not spoken to you about PCI compliance, you are in serious trouble and you need to change quickly. You need to get with a program that's got you PCI compliant, and the good news is, guys, it could be something very inexpensive. It could be something that costs you as little as filling out a form and paying $10 a month. Or it could be as expensive as spending thousands of dollars for expensive scans to be done. We can certainly help you with either of those options, but I'd counsel you to do the $10 option instead of the $1,500 option. So I can help you with that. PCI compliance is absolutely required, again, and fines are huge. One credit card stolen from you is a fine of $100,000, and you'll pay that per card. If you lost 10 cards, your fine would be $1 million. There's not many of you out there that can take that kind of hit to your business, so PCI compliance becomes extremely important. It's required right now, and Platinum can do this compliance for you so you don't have to. So, some of you out there already have merchant accounts. Some of you need a merchant account. I'm here to tell you, you all need a merchant account, whether you have one or not. We can give you amazing rates. We're not tied to any processor, right? We've got 12 different options. We'll take you to all the different places that are best for you. We'll take you to the places that fit your needs, not ours. We service your type of business, and we can help you through the entire process through our free consultation. Some of you might be saying, I already have a merchant account. You need another one. One merchant account is not enough in this industry. A lot of you may have heard of some of the shutdowns lately. Big companies have been shut down by the FTC or have been closed by their merchant processors, have been closed because their banks got spooked and decided, you know what, we're not going to be in the online business anymore. Banks have come out and said, we don't want to participate in online education anymore, educational products. They're too risky. And they've shut down tens, hundreds of accounts, thousands in some case, entire lines of business just because their supporting bank or acquiring bank no longer wants to do business in that. I know I could name off for you right now 20 guys that I know who have been running from certain processors, and you'll notice I'm trying not to point out any specific banks, but there are guys that you know who have been booted from specific processing relationships and found themselves with all their eggs in that basket and nowhere to go. And guess when is the very, very worst time to go out and try and get a merchant account from another relationship? It's after you've just gotten booted from another relationship. Right? Nobody wants to go to a new processor and go, hey, I need to be set up for credit card processing. And they say, great, we just need to get your credit card processing history. And you go, oh, yeah, I just got booted from X company. Well, guess what? They're not going to be too excited about your relationship. So you should always have more than one merchant account when doing business in the direct response world. And the time to get that merchant account is now. Okay, these banks are cutting portfolios. The time to get this is now. Your sales are already coming in. So like I said before, you can't afford to stop sales right now because a bank has decided to discontinue that type of business. Okay, they're going to ask you, why doesn't Bank A want you? You've come to Bank B now. What's the problem? You don't want to start a relationship that way. The best thing to do is go get that backup account right now. Go get that backup account and start priming that pump so that you've got a place to put that if the proverbial you know what hits the fan. Okay, go get that second account now. We can help you with that. We can set it up at such a low price for you that you won't even have to pay fees while you're waiting for it. We can set it up for you so that it makes sense. So you can even if you decide to keep running your payments through the processor you are now, I understand that, and I'll help you understand. If that's a great deal, I'll tell you it's a great deal. Keep doing it. But I will counsel you to get a secondary account or a backup account. Okay? And if possible, run some charges through that account so that it's not, if you're running $1 million a month or even $100,000 a month through a merchant account and none through the other, and then all of a sudden one day you switch over, the bank might ask some questions. So it's always best to run some through some multiple accounts if you can. Okay? It also helps you to have another account if you want to increase your limits. Let's say you have a $100,000 a month limit with account A, and you plan on increasing to $150,000. Well, get that second account with also $100,000 limit on it, and now you've got some room to grow. You can run the additional stuff through the other account. It's also great for testing new products, testing new services, and it even helps for accounting. Right? If you've got a product A and a product B that are both have been approved, maybe you want to run A through one account and B through the other, and it makes your accounting a lot easier. Well, here's what we'll do for you. We'll provide you an honest evaluation of your current merchant processing accounts. We'll tell you what you're paying, we'll show you where your pain points are, and we'll lay out in detail for you how we can help with that. Okay? We'll set you up with merchant services that understand your business. We're not going to put you with a retail merchant provider because you're e-commerce. We'll set you up with money-saving processing costs. We can save you money. I know we can, and we'll show you exactly how we're going to save you money so that you're not being fooled into any sort of bait and switch. We can help you out in any of your areas. Okay, so here's how you get started. All you have to do is go to the link below. Go to the link provided with this webinar and fill out the free merchant processing form. or you can call us at the number provided. We'll be happy to speak to you if you call in. We'll talk to you right then if we have time, or we can schedule a return call at your convenience. Or you can fill out our free merchant processing form. It asks you for your name and your phone number and when's a good time to call. And we'll set that up with you, and we'll answer any of your questions, and we'll go through whatever you'd like to talk about, and we'll help you with your merchant processing needs. This form takes less than 2 minutes to fill out. It's very simple and easy. Here's what we'll provide you after you give that form to us. We'll contact you at a convenient time that you've outlined on the form. We'll give you some options, and you can tell us when and how you'd like us to contact you. We'll go over your business needs, we'll answer your questions about merchant processing, and we'll help you know how you should move forward. We'll initiate a bidding process on your behalf that'll help you get the best terms and the lowest rates. We'll have you fill out a simple form with us that says, here's what my business does. Now, this isn't on the consultation call. On the consultation, we'll set this up for you so that you can just fill out a simple form for us that says, here's how my business works, here's the things that I'm doing, here's the rates that I'm looking at right now, here are my statements, and we'll go out and we'll apply at several different banks that understand your business, and then we'll bring you all of your options. So we can say, here's Bank A, they want to charge you this rate, and it's got, it may have a reserve, and here's what they're going to bill you for everything. Here's option B that has no reserve and has a rate that's equitable, that's in the same ballpark. Which one would you like to do? Okay, and we'll provide you with some options. We can field underwriting questions for you to speed things up. Once we understand your business, we'll frame this in the best possible light for the processors so that they want your business. They price it low. And we'll say all the things that'll help you get the merchant account set up in the way it should be set up. Okay, we'll also negotiate those on your behalf, and we'll stay with you for the life of the relationship. If they raise your rates and you don't like it, let us know and we'll negotiate those down for you. Okay, we can get you the best limits and the lowest required reserves. We'll also, like I said before, give you a side-by-side comparison of the money that we'll save you, so you'll be able to see exactly what you're saving and how. And then we'll set up, of course, the account and the processor of your choice, and that includes your gateway, that includes everything. We take care of it for you. We'll service your account and assure that you have the best processor possible, all at no cost to you. So you're ready to get started? Go ahead and give us a call at the number below or click on the link below, and let's get started today. If you're still not convinced, if you're still saying, well, I've already got an account, or I've got a couple accounts, or I just don't think now is the time, guys, let me tell you what we can do in addition for you. First of all, on those things you do need an account now. When things are going well, is the time to get an additional merchant account. But here's what else we can do for you. We can set you up on our Merchant Lifeline program. Let us tell you about Merchant Lifeline. Merchant Lifeline handles all of your chargebacks so you don't have to, for a low monthly fee. Not only do we handle them, but we guarantee that you'll win them. And if you don't, we'll pay for them. So guys, ask us about the Merchant Lifeline product. Even if you just want to call, if you've got 10 merchant accounts and you're set for life, but you just want to call and say, hey, what's this Merchant Lifeline thing? I've got a lot of chargebacks on one of these products, and I'd really like to know what you guys could do for me by way of chargebacks. Give us a call, fill out that free consultation form, or give us a call, and let's talk to you about this product. We have a chargeback guarantee program that you will love. Okay? Let us help you with your PCI compliance needs. There are companies all over the United States spending thousands and thousands of dollars to have scans done by third-party processors, by third-party companies that make thousands off of you. we can set this up for 10, 15 bucks a month depending on your business. Okay, save you a lot of money on your PCI compliance. We'll give you a free copy of this merchant processing book, so that's just for calling or just for filling out the form, so you can continue to learn about this industry and improve your business. Okay, and you'll have a dedicated representative to help you and your business. Okay, the best part of all of this is it's free. The best part is we're not going to charge you anything for any of this. Contact me and my team, learn how to get started today, give us a call at the number below, or click on the link and simply fill out your information, and we'll get a hold of you at the time that you request from us. You have nothing to lose and lots of money to gain, so give me a call today, fill out the form. I look forward to speaking to you. It's been a pleasure. I look forward to hearing from you soon. Thank you all very much.